Good morning. Good morning, everyone. I am C. Ronak Agrawal, the moderator of this webinar. We are delegated to welcome you all in this webinar, which is being organized by Continuous Professional Education Committee of ICI. Please block your calendar on Wednesdays and Fridays to get insights into various emerging and high-value technical topics. It is my pleasure to be moderator for the webinar on overview of new financial statement format for non-corporate entities and importance of CPE learning and its compliance for members. In short while, we will start this webinar. First, I would like to apprise you about CPE committee. The role of chartered accountant is evolving continuously to accept newer responsibilities in a global dynamic environment. The future of CS depends on being flexible and open to innovation. Therefore, the need of hour is to innovate as per the requests of contemporary business environment and accordingly upgrade the curriculum and education system of chartered accountancy course. The committee is being believed that members of ICI should beyond the traditional area of practice and seek and explore new area of business and profession. And hence, the CPE committee is mentoring the members for providing guidance through various workshop, seminar, national conference, background material, etc. and simultaneously by encouraging youth and dynamic professional to grow as seminar of to grow as speaker of ceremonies, etc. in CPE program. The program of this evening is as follows. We have two sessions of 1 hour and topic areas were first session will be on overview of new financial statement format for non-corporate entities and second is importance on CPE learning and its compliance for members. Our element speakers will talk about mention two emerging area of professional interest. Now, I would like to welcome our Vice Chairman, sir. Our Vice Chairman, C. Vishnu Agrawal, sir.
Thank you, Ronakji. Respected our own Central Council member, C. Satish Gupta ji, the chairman of the CP committee, and the Pramod Jain ji, our Central Council member. Friends, under the CP committee, various initiatives we have taken and ongoing we are doing the various program across the country for the benefit of the members. On every Friday, we are also doing the webinar and one speaker from the abroad and one speaker from the India. We always thought that our each and every Indian chartered accountant must have the knowledge of not only of the Indian perspective, but they must know each and every aspect of the global scenario. Friends, in the last council meeting, the council has approved the new financial statement for the non-corporate SSE. So under the CP committee, we have thought that each and every member must know the format of the new financial statement for the non-corporate SSE. Friends, and today we have with us our own Central Council member, C. Pramod Jain ji. Friends, whenever any new emerging area comes, always we have comes in the mind our new for any topic, our CA Pramod Jain ji. And Pramod Jain ji is the specialized for each and every new aspect. And friends, today he will crystal clear about the fundamental of the subject of the financial statement for the non-corporate SSE, as well as friends, we members have know only that we have to complete the 30 CP hours for in the calendar year. And some members have thought that if I will not do the CP, mandatory CP hours, 30 hours in the whole calendar year, and what is its consequence, friends, our Satish Gupta ji, chairman of the CP committee, will take this session. And first we take the session of the financial statement for the non-corporate SSE. Pramod bhai, thank you very much for accepting our invitation from the CP committee and spare your valuable time for our members. Pramod, and now I request moderator to introduce our Pramod Jain sir for benefit of all the members. Thank you, friends.
Thank you,
Ronak,
Vishnu.
yes.
Yes, sir. Thank you. Now, I would like to invite C.S. Satish Kumar Gupta, sir, who is the chairman of CPE committee. Before that, I would like to introduce C.S. Satish Gupta, sir. C.S. Satish Gupta, sir, is serving as chairman of Continuous Professional Education Committee, CPE committee of Institute of Chartered Accountants of India. In addition to this role, he is also chairman of the Union Directorate and vice chairman of Committee for Members in Practice for the current term. He has previously served as Central Council member of ICI from 2019 to 2022, during which he held key leadership positions, including chairman, committee on corporate
Let us start. मेरे ख्याल से नेटवर्क इशू है उसके साथ में.
Yes, sir.
Okay, तो let me start. तो thank you very much प्रमोद भाई, विष्णु भाई, and हमारे अजीत भाई and all the delegates and participants which are attending in a large number this particular very important webinar. Important in the sense that it covers the newly implemented guidance note for non-corporate entities. And friend, there is some issues our members are facing, and I think Pramod Bhai is the best person to take care of all those issues and to answer all the queries of the members who will definitely ask and will be benefited by the presentation of Pramod Bhai. Friends, Pramod Bhai needs no introduction. Pramod Bhai is a person who is a pure ethical council member in the council, and he is always ahead in the, I can say, the forward improvisation of the areas and the agendas in the council. So he is a wonderful person, and whatever new thing comes to audit, comes to accounts, comes to tax, international tax, whatever it is, the deliberation and the involvement of the Pramod Bhai is always remembered and not forgettable. I think we should start with the deliberation of Pramod Bhai today. I would request Pramod Bhai to please come forward and share your views on this particular guidance note on the non-corporate entities and the issues, also tackle the issues of the members. So over to Pramod Bhai.
Thank you very much, Satish Bhai, Vishnu Bhai. C.S. Satish Gupta ji, our Central Council member from Jaipur, who is also the chairman of the CP committee, as well as already informed, of the Union Directorate. And Satish Bhai, fantastic work you are doing in both CP committee as well as Union Directorate. Just to tell one important point to all the members who are listening. Now this year, when you will be generating UDIN, so kindly ensure that in case you are issuing a report which is modified, that is, it is either qualified or adverse or disclaimer or other matter or emphasis matter, kindly click the relevant portion in the UDIN, so that when you are issuing a report and it is modified, so what nature it is, that data is there with the institute, so that we can actually collate that data and have an understanding that how our members are issuing the report, how many of the reports of the total audits, if we talk about, how many of them are modified and how many of them are non-modified. So whenever it will be required, then we'll have to work over that data. So fantastic work, Satish Bhai. And of course, CA Vishnu Agarwal ji, the vice chairman of this very important CP committee, who is from Mumbai. The first time entrant is also, he's the vice chairman of the direct tax committee, also an expert in income tax. Both actually chair and vice chair, if I talk about, they both are chair and vice chair of the CP committee, but both are having both are expert in income tax. So that is really good that we are having good technical persons in our institute and looking after both administrative as a technical matter. And of course, the moderator Ronak Agarwal ji and the secretariat Ajit Nath Tiwari ji. I'll be sharing a small presentation, and wherever required, I'll request the chair, the vice chair, that wherever you feel that yes, here some question is there or you have anything in mind, let us make it an interactive thing. So whatever question you feel that it is there subject to that slide or near about, so we can have that question there itself. So I'll be sharing my screen, and we'll be talking about a brief about the new formats. And here to start about
Pramod Bhai, just information more. Pramod Bhai, around 1,150 members have already been listening you, have joined and are listening you, and you can see that what are their expectations from you. So okay.
Very sure, and of course it would be there later on the YouTube also. So members can use that later on also. As informed to me, it would be there on the YouTube also, I suppose, later on, CP committee. So members can take benefit of that. Now here, friends, when we talk about this formats, the formats are there in 3 different publications, I would say. One is for the non-corporates, which is proprietorship, partnership, societies, trust, which are not charitable, right? So, and anywhere, if any format is prescribed somewhere, that will prevail in any law. If not, then these formats, and which is through guidance note for financial statement of non-corporates. For limited liability partnership, we have got another guidance note, a separate guidance note. The formats are again different. New financial statement format for the limited liability partnership. Questions have come, various questions have come that whether the same formats are applicable to charitable trust. The answer is no, because we have got for that the technical guide for the financial statements of non-profit organizations. And for the NPOs we talk about, those formats should be used. And in case that trust is created or regulated by any other entity, for example, in Maharashtra, there is a Bombay Trust Act that provides the formats. So if it is registered to the Bombay Trust Act and they provide the format, then you'll have to use those formats. Otherwise, you should use these formats. The link for all the 3 publications, along with the Excel file thereof, Excel sheets of the formats for all the 3, are available on the Accounting Standard Board website, asb.ici.org, where you can download and use them. Now I'm going with my presentation. I'm sharing my presentation and go around, right? Sorry. Is my screen visible, sir?
Yes, sir, visible. Yes, sir, screen is visible.
Thank you. Thank you.
Now visible, sir, please.
Thank you. Now, if I talk about formats, the formats of financial statements overall, if I talk about, we can divide it into 2. One is a companies. For the companies, there is Schedule 3. For other than companies, it is the Institute of Chartered Accountants of India. Unless, as I said, even for companies, if I talk about, it is not the Schedule 3 for all companies. For example, the banking companies, the RBI Act provides. The insurance companies, IRDAI provide. Electricity companies, the Electricity Act provides. So even these 3 type of companies, their formats is different than Schedule 3. So if a regulator thereof provides different than those, otherwise the general formats are for companies Schedule 3 and for non-companies ICM. Now, just to refresh, if I talk about Schedule 3, we have got 3 divisions. Division 1, where the company's accounting standard rules 2021 apply, or Division 2, to which Ind AS apply, and Division 3, to which NBFCs who have to comply with Ind AS, that they have to comply with the formats which are given in Division 3 of the Schedule 3. And friends, this is very important to understand the journey of accounting standards in India. There were no accounting standards in India. Today we all talk about it, but for the first time in 1977, your institute constituted the Accounting Standards Board. And till that day also, there were no accounting standards in India. In India, I'm talking about in India, not I say in India. And still the ICAI had been giving the opinions on the accounting matters based upon the generally accepted accounting principles. For the first time in 1979, the accounting standard issued the AS1 as well as the preface to the state of AS. Till that day, so there were no accounting standards which were mandatory in India. For the first time in 1987, AS4 and AS5, account standard 4 and account standard 5, they were made mandatory in India. Who mandatory? On whom it was mandatory? It was made mandatory on the members of ICAI. What was said? It was said that whenever any file, it is their duty, it is their responsibility to ensure that when those financial statements are audited, they have to ensure that they are complying with the relevant accounting standards 4 and 5. So in India, the accounting standards mandatory came from ICAI on its member, through its members, for the whole nation, I would say. It was not restricted to a company, a society, a trust, or someone else. It was for the auditors, because ICAI, if I talk about, they are a regulator for the members, and they have a duty towards the total overall financial reporting in the country. Because as on date also, only a chartered accountant in practice can audit any financial statement in India. So that responsibility has been constitution. Of course, it is established by an act of members to ensure that the financial statements reflect true and fair view. And for that purpose, they have to comply with the accounting standards. In 1991, the other accounting standards 1, 7, 8, 9, 10, 11, all were made mandatory. For the first time, if I talk about the Ministry of Corporate Affairs through the Companies Act 1956, they made it mandatory on companies that they have to comply with accounting standards. Which accounting standards? Unless the MCA notified themselves. Then they amended the act. Of course, from 2000, 2003, another 12 accounting standards were issued by ICAI. Then the Companies Act was amended, which said that the Ministry would notify the accounting standards as recommended by ICAI and in consultation with NACAS. Now that NACAS under the Companies Act 2013 has been replaced with NFRA. But again, the duty that MCA would be notifying on the recommendation of ICAI and in consultation with NACAS and now NAFRA. For the first time in 2006, the ministry notified the company's accounting standard rules 2006, notified all the standard changes between the standards and the MCA notified standards. But yes, the standards overall, recognition, measurement, disclosures, they were overall same. In 2007, when our Honorable FMPM, they accepted worldwide that, okay, because internationally India has been growing, the businesses were growing, we have to comply with the accounting standards which are prevailing throughout the world. So throughout the world, 2 set of standards are applicable. If I talk about US, they have got US GAAP, all other countries IFRS. So our FMPM, they said, okay, we'll go with IFRS. And then they said to the ICI, okay, now it is your duty to ensure that how we can go and comply with the international financial reporting standards. And at that time, the Institute of Chartered Accountants of India, the Accounting Standard Board, the Council, President, Vice President, they thought that we will not adopt IFRS as it is, but we would, because the Indian situations are different. So we would be converging. We will have certain carved in and carved out and converged. So converged one, the institute recommended to the ministry, and under the Companies Act in 2015, the Indian accounting standards were notified as the Company's Indian Accounting Standard Rules 2015, which we call as Ind AS. Slowly and gradually, the standards, the accounting standards, the Ind AS, they all were keep on modifications. That there are new standards. The latest being the Ind AS 117 insurance contracts. So all that has been happening since that date. So till date, if I talk about, yes, those accounting standards are mandatory. And again, since 1991, as I said, 87 was first, and then 87 two standards, and then 1991 other standards. They are still mandatory for all non-corporates also since then. Now, if I talk about various regulators, how they started accepting the accounting standards. Why I'm talking about accounting standards for the financial statements of non-corporates? Because we have seen that certain times when these non-corporate sometimes err to not comply with the accounting standards. And that is the most important thing, because if a financial statement, and the auditors have to ensure that if they are not complying with the accounting standards and consequently not reflecting the true and fair view, they'll have to qualify the reports, right? So if I see various regulators recognizing the accounting standard issued by ICI, 1999, I already said, the Ministry of Corporate Affairs through the Companies Act 1956, SEBI in 2001 stated that all listed have to comply with the accounting standard as notified by ICI through, of course, the MCA, because till that date, the ministry had not notified. Only ICI standards were applicable. IRDAI for all insurance companies, they said they have to comply with the accounting standards. 2003, the Reserve Bank said that yes, they have to strictly comply with the AS. And friends, till date, the insurance entities and the bank entities who are not companies, because without that, the financial statements are not reflecting true and fair view, right? Now, for companies, if I talk about that Companies Accounting Standard Rules 2006, that has been replaced by the Companies Accounting Standard Rules 2021. So kindly check your notes to the accounts, that when you say that the company is complying with the accounting standards, then it is mentioned that they're complying with the Company's Accounting Standard Rules 2021 as notified under Section 133 of the Companies Act 2013. For companies, it is not the accounting standard issued by ICI. It is the company's accounting standard issued, notified by the Ministry of Corporate Affairs under Section 133 of the Companies Act 2013 as on date, right? So please take care. And what was the change? The change was that earlier, a company, for the applicability of accounting standards, if it was an SMC, that earlier the limit was if the turnover is less than 50 crores or borrowing less than 50 crores, then it was an SMC. Now that limit is 5 times, that a company whose turnover is less than 50 crores and borrowing less than 50 crores, they are more than 250 crores or borrowing more than 50 crores, they are other than SMC. So what happens? If it is an SMC or other than SMC, what is the difference? The difference is that for SMC, certain relaxations are given. And when those relaxations are given, company usually adopts those in preparation of the financial statements. And when it accepts that those is mentioned on this slide, mentioned then to the that the company is and media science company is accounting standard, not as the company act, accounting standard itself. So kindly look into this. This is mandatory. If I talk about the overall applicability of the accounting standards in India, various entities, they have to follow the accounting standards. Companies have compared with the company's accounting standard rules 2021, which are having 27 standards, or India's, which are having 40, the AS issued by ICAI. And friends, these two are literally same except for one change, 27 standards each. India's, if I talk about, they are applicable only to listed companies or companies whose net worth is more than 250 crores or their holding subsidiary or associates. In my information, in India, if around annually there are 50 lakh audits done, then out of that 50 lakh, only around 27,000 have to follow India. All others have to follow either these or these, maybe around say 15 lakh. All other 35 lakhs I would talk about have to follow the accounting standard issued by ICAI, right? But basically these two are still same, right? Now important, friends, from financial year 24-25 onwards, that is with effect from 1st April 2024, these new formats are again through the guidance note. Guidance note is this applicable with effect from accounting periods beginning on or after 1st April 2024. And this applicability for non-companies is also beginning from 1st April 2024. Now there are no 4 levels, 1, 2, 3, 4. Now there are only 2 levels. One is large and second is micro, small and medium-sized entities, MSMEs. Large remains same, no change. Turnover more than 250 crores in the immediately preceding financial year, or borrowing more than 50 crores in the immediately preceding financial year. Now this level 2, 3, and 4, they have been merged into MS. And all the relaxations which were given in level 4, all the relaxations, they have been now given to MSMEs, which I'll come into the next slide, right? In case there is a preparation of a non-company entity, which is MSME, So its notes to accounts should also contain this paragraph, which is again given in the preface of the accounting standards, that this entity, because it also gets certain exemptions. Right? Why we have been talking about these accounting standards? ICAI, as I said, is the I would say regulator for the chartered accountants, but of course all chartered accountants are responsible for due reporting of the financial statements, financial reporting, and accounting standard is mandatory, and it is done by ICAI. Today what happens that some of a person who may be a member, who may not be a member, they may say that why these formats, who has brought it, who is the regulator? ICAI is a regulator, just like accounting standards. It is not that when we comply, we have to comply with these financial statement formats. Basically, they are complying with all accounting standards and the framework for preparation and presentation of financial statements. I'll just go by few slides and then you understand that there could be certain errors while currently preparing or auditing a financial statement of a non-corporate. All those are covered under these new formats. And when we are talking about India growing, India to be the topmost economy of the world by 2047, how it will grow unless the financial reporting of my all entities, including the small entities, is not appropriate. Is not appropriate. It is not true and fair. And here is the role of all chartered accountants, all business entities, that yes, if the financial statements are prepared, they have to be prepared true and fair. And for that standardization, that proper transparency and disclosures, these financial statements have been notified by your own ICAI, the Institute of Chartered Accountants India. And that when we are talking about the history of accounting standards, you realize that till date, if you are talking about these financial statement formats for non-corporates, they still have to comply with the accounting standards. It is mandatory. If it not complied, then auditor have to qualify. They're not escaping that merely by following this format or not. It is still applicable since last more than 20 years now, right? Now, this is applicability if I'm talking about. Because I can talk about companies, non-companies. Accounting policies is required even in non-companies, MSMEs. You need to have notes to the accounts. Whatever accounting policies are applicable, it is required to be disclosed. And this is given through these formats. That yes, you have to comply the relevant disclosures. For example, nearly all non-companies entities also, they have borrowings. They can borrow from the relative friends. Companies, there are restriction. Non-companies, there is no. So if they are having borrowing, then they have to comply with AS 16. Borrowing disclosure is required. Similarly, if I talk about inventories, how the inventories are valued, that has to be given in the notes to accounts even of non-companies. And that is given in these formats. For example, I'll tell you the disclosure. Sometimes we see that in the case of non-companies, the closing stock is given as a total amount, but no, there is a requirement to classify that inventory. In case it is a manufacturing concern, raw material, finished goods, WIP. If there are trading stocks, stock in trade, that is required as per AS2. As on date, not these formats, earlier also, since 1991, yes, mandatory. It is mandatory. If not, then auditor will have to report accordingly. It is required. The accounting policy, some may write that it is valued at lower of cost and market price, but most of us it is not correct. It has to be valued at lower of cost and net realizable value. And net realizable value is what? Selling price less cost incurred to make the sale. Plus, we have to give that how the cost is determined, whether it is on FIFO basis or average or specific identification, or it is a retails, then it could be retail. So all this has to be given out there. It is required. It required. Now, if we talk about non-companies, non-corporates we are talking about. If the turnover is more than 250 crores, earlier it was 50 crores, cash flow statement is also required. Cash flow statement is also required. Yes, then it is required. If you are in case you are falling within recognition, you say accrual. Even say service industry, chartered accountants or construction contractors or any service provider, if they are following accrual system for their own accounting, then there is something called percentage of completion method, POC, that whatever activities, expenditures you have incurred up to 31st March, suppose there is a case under income tax and of a client and a chartered accountant has there in the next year. So certain work has been done, unbilled revenue has to be recognized. Same is for my concurrent audit, statutory audit, TDS compliance, GST compliance. How much is the unbilled revenue? Software company, unbilled revenue. Construction contract, unbilled revenue. My benchmarking would be there for issuing an invoice, but how much is completed and benchmark not received, that has to be recognized as revenue, and this is given as per, this is required as per AS 9, AS 7. Similarly, if I talk about, there is no concept of now fixed asset, it is now PPE since 2016. The terminologies And again, this is since 2016. These formats does not provide anything new. It was to be done since 2016. And yes, I agree that there could be certain issues for, say, depreciating an asset, depreciate as per income tax. As per AS10 has been mandatory since 1991. Nothing new. So earlier also auditor had to report if it was a non-compliance of AS10. Today also it is mandatory, and these formats provide those. Now, if they are not providing, report accordingly. You have to report accordingly in your tax audit report, because normally we issue a tax audit report normally for the non-companies 3CB. In 3CB, we have got two way reporting. One is para 3A and second is para 5. In para 5, it is 3CD reporting, and in 3A, it is all my financial statements. Right? So reporting is required. Now, another important point. If I talk about employee benefits, proprietorship, partnership, LLP, companies, they all have to provide for gratuity. If they are following accrual system, it is mandatory. Please provide. For companies, it is mandatory to get the actuarial value done. For non-companies, more than 250 crores, yes, actuarial also required. Irrespective of number of employees, if you are giving a long-term employee benefit, you have to provide and get the actuarial done. For less than 250 crores, the actuarial is not mandatory, but provision for gratuity is mandatory. If you don't make a provision, then of course financial statements will not be reflecting true and fair value, because my profit would be overstated. Under income tax, it is not allowed, because that is allowed payment basis. But for the financial statements to reflect when it is required. So please, gratuity is required. Similarly, the two standards which I was talking about, related party disclosures and impairment of assets. Here, the limit is not 250 crores. Here, the limit is turnover is 50 crores, which I'll give in the next slide also. So applicable, right? And if I talk about all proprietorship partnerships also, there is a requirement to provide for current tax, income tax provision. Even in proprietorship, AS22 is mandatory. Since year 2003, 2002-2003, it is mandatory. Yeah, for large, both current and deferred, it is required. For companies, of course, it is required for everyone. So these are, these accounting standard compliances, if I talk about, they all are covered into these formats. So at the ICI, at the Accounting Standard Board, we thought to improve the financial reporting with the intent to be a partner in nation building for the government and we all businessmen to achieve that level of the year 2047 to be the one of the developed countries in the world. Our financial reporting need to improve, and role of chartered accountant is paramount into that, right? So what are the relaxations for MSMEs? Certain disclosure requirements for AS10, like these disclosure of para 87, AS11, para 44, AS15, as I said, the actuarial variation not mandatory, but normal provision is mandatory. Like releases, certain paragraph disclosures not required. AS22, that is current provision, they have to only comply for MSM. Relaxations have been given. For other than companies also, for MSMEs, I'm talking about non-corporates, right? AS 1828, as I said, that it would be applicable if my turnover is exceeding 50 crores or borrowing is exceeding 10 crores. Only then it is applicable. Here, the limit is not 250 crores or 50 crores. Right. For related party, actually, there are different definitions under different statutes. If I talk about accounting standards, it is AS 18. For Companies Act, it is section 2, subsection 76, which is there for section 184 and 188. And for income tax, it is 48(2)(b). The definitions cannot be interchanged. If we are reporting under the income tax and Form 3CD, then the definition as per 48(2)(b) is to be taken, not as per AS 18. In the financial statements, in the notes to accounts, if I am disclosing, then I cannot take the definition of 276 or 48(2)(b). I have to take as per AS 18. And in income tax, it is only payments. Here it is payments, receipts, and even closing balances. It is not there in an income tax. And Companies Act for 184, related party transactions, or 184 or 188, the definition you have to see is section 2, subsection 76. No interchange, please. No interchange. Now, coming to these formats of financial statements for non-corporate entities. Now, of course, for the balance sheet, if I talk about, there is no horizontal format now, only it is vertical format. And the figures of previous year are mandatory since year 2000. It is not new, please. These formats have not been mandatory the previous year figures. The figures of previous year were already mandatory through the framework. Framework for preparation and presentation of financial statements issued by ICAI in year 2000, mandatory, sir. Nothing new. It is required. And if I talk about my balance sheet, this is actually, I would say, in a lighter vein, inspired from Division 1 of Schedule 3. Division 1 from Schedule 3. And now we talk about it as owners' funds, which have owners' capital account. Now, questions have come that why to have reserves, keeping in mind any financial statement all over the country. Now, suppose a particular chartered accountants, all clients may not be having reserve surplus, but suppose a particular chartered accountant may be in Surat or Jalgaon, they decide that in our partnership firm, the businessmen, they decide that we'll not distribute the profit for next 3 years or 5 years. So where to park the profit loss? It has to go to the reserve surplus. So in case your clients, so I would say majority of the business entities, proprietorship, partnership, LLPs, they don't decide. A partnership and LLP through their partnership deed or LLP agreement, that they say my profit loss, whichever is derived on after all computation, it will go to the partners. Then there is no reserve surplus, then you can delete the whole line, current year and previous year. If both years there are no figures, you can delete the whole line. Like, for example, MSMEs, now deferred tax is not there, so whole line delete. Have only those figures which are applicable to that entity. And this is for both companies as well as non-companies. Right? So everyone knows about this. Now, if I talk about owner's fund, now owner's capital account, if I talk about it, would have capital account, current account. Now, suppose an entity is not having a current account, delete this. So it would depend upon how they have agreed upon. In partnership or LLP, if I talk about, everyone is already preparing this. Name of the partner, interest, withdrawal, share of profit loss, closing balance, everyone is having it. And you have to, of course, give for current year as well as previous year. What? Because the financial statement says so. So in the notes also, you have to give for current year and previous year. Right? In case of proprietorship, opening contribution, less profit, withdrawals, closing balance, we're already giving it. Already giving it. Hence, no particular major change. The two things are there in these financial statements, if I talk about. One is if I talk about previous year figures, which many could have missed it. And second is division into non-current and current. Current and non-current, which we are already doing for companies. And this is required. This is required. Please understand. Most of us knows that what is current and non-current. Assets or liability. Anything which is receivable or payable within next 12 months from the end of the reporting date, which is 31st March. So next 12 months, if it is receivable, payable, it is current. If it is not receivable or payable within next 12 months and it is beyond, then it is non-current receivable. So that detail is to be given. So non-current assets, as I said, PPE, it has to be there, no fixed assets. If you are having software, it has to be intangible asset. If you are not having any intangible asset, delete the whole line. So case to case, it would vary. And these note numbers are all going to my notes to the accounts, right? Now, current liabilities, we are giving trade payables due to my macro and small entities. Other current liability, we are giving all GST payable, TDS payable. Now, sometimes we have to differentiate between provisions and the current liabilities, expenses payable. If there is an electricity amount which is payable, as on 31st March, we have not received the invoice. So we create a provision. We say we create a provision, but that is not a provision. That is an expense payable. That is an expense payable. Provision are like warranties, etc. There are provisions, right? So those details. Now, again, current assets, my inventories, trade receivables, cash bank balance, all those, most of us, I would say 100% of the chartered accountants knows about that. And preparers, businessmen also, majority knows if they are having certain corporate entities also, right? So current assets, current investment, inventory, trade receivable, cash bank balance, inventory is the classification which I said, which is as per AS2 as well as ICDS2. Mandatory, these details, classification, we do it for companies. Here also it is required. Other important, in case an entity, proprietorship, partnership is having a secured loan, then in the notes you have to also disclose what is the nature of security, what are the terms of repayment, and in case the loans are guaranteed by owners, details thereof. Secured loan, just to give you an example, suppose a proprietorship firm is having loan against its personal immovable property, which is not there in the books of accounts, and it is not on its stocks or trade receivables, then it is not a secured loan. For bank, it is secured, but it would be a secured loan only when the asset of that entity is charged. That is given as a hypothecation or a security, otherwise not. This is for all companies or non-companies, everyone. Then details as per section 22, the 5 details. This is there since, sorry, it is 2026. I'll amend that. MSME Act 2026. It is required since year 2007. It is 2006. Sorry. So it is still required, right? And of course, the property, plant and equipment schedule for previous year is also required. I received a question, how many years? Of course, 2 years, current year and previous year. It is required. It is given all in the notes. Trade receivable. In the companies, we give an aging of less than 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, more than 3 years. But for non-corporates, it is the old one, more than 6 months and less than 6 months. Of course, you have to classify into good and doubtful. And friends, if a trade receivable is doubtful, I would say, suppose there is a litigation, a case fight, then you, assessee or the owner cannot disclose the full amount as good. You've already filed a case. You have to create a provision for doubtful debt. Or the trade receivables are pending for more than 2 years, 3 years, and the assessee is saying good. No, it cannot be good. You have to create a provision, because if they are good, then why they are not being paid? You have to ask and then create a provision for doubtful debt. That is all required. And when you follow these formats, everything of that is complied accordingly. Statement of profit loss, of course, here you have to, again, Division 1 of Schedule 3, revenue from operation, other income, cost of material consumed, purchase of stock and trade, changes in WIP, employee benefit, depreciation, finance cost, others, and then schedules thereof. Schedules thereof. Right? This is, again, revenue from operations. Here, someone say it should be GST. No, it has to be excise duty only. excise duty is still there on certain products like liquor, like petroleum products. So only that GST is not coming here. That is required as per AS9. And all other incomes have to route through profit loss account. In case of proprietorship, say he's also receiving salary. No, these are personal, not business. In case of proprietorships, his incomes, expenses, assets, liabilities, personal should not there be in the books. His personal should be separate, business should be separate. What the financial statements have to be prepared should be of the business. If they are containing the personal assets or investments, it should be taken out from the financial statements. And if even still they continue, then the auditor should report appropriately in the audit report. That's why if you see these financial statement formats, all are my business assets only. Right? Like any immovable property which is not used for business and kept only for the purpose of leasing, it is not my PPE. It is my investment property. So all these formats are getting complied with. Other items, current tax, deferred tax. In case of MSMEs, this deferred tax will not be there. If there are no extraordinary items, exceptional item, remove this. So applicability discontinuing nahi hai, then you can remove this. All it is there. You can amend accordingly, right? Now, previous year figures are important. And as I said, it is mandatory since year 2000, which is given through this very, very important and very nice publication by ICI. Frameworks, statements, standards, guidance note, all are mandatory in nature, right? So frameworks are mandatory. So these framework contains the previous year figures are there. And this was issued in year 2000. Mandatory. And in case you are auditing a financial statement of which the previous year was not audited by the same auditor who is auditing the current financial year, or the previous year figures were not audited at all, in that case, please take care of SA 710 to report in the audit report in case of 3CB para 3A. Because ultimately these financial statement formats, if I say, when the auditor is auditing, he has to ensure that when he says it is true and fair, then he takes responsibility for the overall things, current year figures as well as the previous year figures. So if they were not audited by him, he should report appropriately, please. Right. Certain other matters, rounding off for non-corporates is not mandatory. Unlike companies, in companies Schedule 3, it is mandatory, right? Then you cannot offset income and expenses, asset liability. It is not that you have the assessee has earned certain interest and expended certain interest. He discloses net. Not allowed, please. Unless it is a reimbursement. For example, he has incurred certain freight and is getting reimbursement, or he has incurred certain expenses, he has got that reimbursement. Only that can be netted off, otherwise not, right? In case of non-corporates also, you have to disclose the contingent liabilities, pending litigations, all. That is as per AS 29. The financial statements overall, as we say, have to reflect true and fair view. Standardization throughout the country, right? Use the terminology PPE instead of fixed assets or tangible assets. That is required. Certain terminologies to be learned or unlearned. Like for trade debtors, we say trade receivables. Traders, we say trade payables. Only vertical form. Fixed assets, no PPE. So everyone knows about that. Now, this again, very important to tell everyone. This is coming from the framework for preparation and presentation of financial statements. When a liability is to be derecognized or seized from the financial statements, it is not that it is the owner's wish that any moment he can derecognize a liability. Payment of cash, transfer of other assets, provision of services, replacement of that obligation in another, conversion to equity, or creditor waiving or forfeiting rights. Owner cannot do it by itself. Secondly, payment of cash. That money should be going out of his bank at the year end. It is not that he has issued a check which gets cleared later on. It should be cleared by the year end, right? This is there in the framework. And these are the formats for the NPOs. Please download and use it. I'm not going in detail. Basically, if I talk about, they are called restricted funds and unrestricted funds. In case a NPO is not having the restricted funds, remove the whole line item. And in the notes mention that the NPO, the trust is not having any restricted funds. All other formats, if I talk about, is again taken from Schedule 1 or Division 1 of Schedule 3 or Check 2013. Everyone, nothing new. Like income expenditure, the change that yes, in income, donation, grants, fees from renting services, like we receive for schools and hospitals, we receive the fees, so it will be coming here. If we are selling certain goods from here, other income will include my interest and all other dividends, etc. Right? So here, and my expenses, donations paid, employee benefit, material consumed, I purchased certain goods, distributed, all those things. So if you are not having restricted funds, remove the whole column. Have one column, and in the notes, right, we have got no unrestricted, we have got no restricted funds, all are unrestricted funds, and continue. So those changes can be done. Those changes can be done, right? So here, experts panel, anyone can join, and of course, presentation I'll be sharing on this platform. And now I can take any questions, sir. I can take any questions which are there.
Very nice. Question, Ronak, if you have any question, you can ask.
Yes, sir. Thank you, sir, for such a knowledgeable session. So there is a question. There is a professional who is maintaining books for GST purpose on accrual basis for GST compliance, and for income tax purpose, the books was maintained on cash basis. How will we deal that?
No, it is not about dealing. For GST, there is no requirement to prepare those financial statements and give to them. For general purposes, generally purpose financial statements, he's preparing on cash basis. Now, if you're preparing on cash basis, then there is an announcement which is issued by ICI in 1991, where we have said that they should comply with the accounting standards as applicable. And it says that announcement says that AS1 talks about accrual system, but the entity where it is required to prepare on accrual basis but is not preparing on accrual basis, a qualification is required. But if it is not required under statute to prepare accrual basis, like proprietorship, partnerships, LLPs, they all can prepare on cash, allowed. Then there would be no qualification. But observation should be there in the para 3B, which is there. We issued a technical guide for cash basis of accounting that contains that notification. Also, you can download from the ASB website and use that. So cash basis of accounting, follow these formats, whatever are not applicable, because it will not be having any trade receivables, trade payables. So that all can be removed. And that very small technical guide would be very, very helpful in the cash basis of accounting. Thank you.
There is another question. Some small vendors who are filing their income tax return in 44AB or AD, and they ask their CA to prepare the financial statement for the purpose of banking purpose, and some of them will ask for certify the same, and at many times only financial statements were needed. At that case, whether we need to prepare the financial statement in this format or at regular format?
No, very important point here. First of all, when they are filing their return under section 44AD or ADA, then as per income tax, they are not preparing the financial statement. But if a chartered accountant is required to certify, it can be two types of certifications. One is bankers, a non-chartered accountant can use the terminology as certificate. But when a financial statement is there, it has to be report. So if he's issuing a true and fair view, and issuing a report as per SA 700, then the financial statements have to reflect true and fair view. And if that has to reflect true and fair view, then all accounting standards have to be complied with, because the auditor responsibility is there. So those books are not there, and he should appropriately report that in this audit report, that these are not for the purpose of income tax. Or then the relevant SA 700, 800, whatever it is applicable. But compliance of the accounting standard is mandatory, the frameworks are mandatory, and that's why these formats should be used. These formats have to be used, because otherwise the accounting standards will not be complied, the frameworks will not be complied, and when the auditor is issuing a true and fair view, it would be an issue on him, right? So it should be complied.
There is a question. In plant machinery and equipment column, there is a land was showing, and the owner or the proprietor has the intention to sell the land in next 12 months. So we will show that in property or in current assets.
Property, if it is for the business, kept for the business, now it is held for disposal. As I said earlier, if it is held for disposal, then my AS 10 says it would be PP, but a separate line item, assets held for disposal. Held for disposal. But of course, if it is my PP, otherwise it could be investment property, as I discussed earlier. Depends upon what is the fact, right? It will not be current asset.
So there's a question from a member from Goa, whether the format is applicable for societies registered under the Society Registration Act, or
Yes.
for
it is applicable for the societies, because Societies Registration Act, these are not charities. Certain societies, Society Registration Act 1860, if they are charitable entities, then the NPO technical guide would be applicable. But if they are not my charities, non-profit organization, NPOs, non-profit organization formats are a bit different. If they are not non-profit organizations, then they have to follow these formats.
okay. And sir, for residential welfare society, the same will be applicable also.
Yes, same.
Okay, Pramod bhai, I have one question.
Yes, boss.
One member from Jodhpur has asked that there is a specific provision in Companies Act 2013 to they have prescribed the statutory format for corporate entities, but there is no such provision in the Income Tax Act. Still, for the purpose of tax audit,
Income Tax Act doesn't provide even for companies. Income Tax Act doesn't even. Sorry, I stopped you in between. Kindly complete, then I'll answer.
now the question is same that whether since there is no provision in the Income Tax Act, so is it mandatory for the assessee?
My question out here, then they are not complying with even accounting standards, na? Because those accounting standards are not there even under the Income Tax Act. So what they are doing? So in that case, for employee benefits, no gratuity. So my financial statements is all hayward. Then how the auditor can say it is true and fair as on date, or say 2 years ago, or 3 years ago, or 5 years ago? So they are not complying with accounting standards. Has income tax issued it? Has any other regulator issued it? So if they are complying with the accounting standard, who has issued it? ICAI. I'm talking since 1987, 1991. It is not that any act. Accounting standard history, that's why I emphasized since beginning. Till date, RBI, for the banks who are not companies, they say comply with the accounting issued by ICAI. Which law? ICAI standards, na? If there has to be a regulator for financial statement reporting, it has to be through chartered accountants. Just like accounting standards, auditing standards. Same with these.
Second question, my just suppose as of now, accountant definition only includes chartered accountants, right? If in future that definition includes other professionals also, and they need not to follow the accounting standards, issued by the ICI.
The risk is of the person who is issuing the report. Tomorrow, accountant is
But
not.
that may lose to our profession, na, Pramod bhai.
I am not talking about the profession. I am saying any person who is issuing a report on a financial statement, he has to ensure that they are in compliance with the framework and accounting standards.
Right, I got your point.
And if they are not,
but whether that is practical or not, we should not consider that aspect also.
No, it is practical. Otherwise, what will happen, Satish bhai? Tomorrow, an organization say, I will have my different standards. You are recognizing my sales separate, purchase separate. My standard is, I'll say everything is deductible. So I'll have a 10 crore sales, 8 crore purchase. I'll show only 2 crore net. This is my standard. So where is the standardization in the country? Who has to do that? ICI. Right. That has been given by the Parliament of India. So standardization is must.
Great. One more question from the Bhandari ji of Jodhpur, that in case of gross profit reporting, there is in this format, there is no gross profit figure does not come. But in 3CD, it is required to give the gross profit also. So what SSC has to do, you know that practically chartered accountant has to do the recalculation of the gross profit. So it will
Satish Bhandari ji, I'll just ask a question. So you must not be reporting for companies, na? Because companies also don't show gross profit. So they must not be reporting in 3CD, na? How they are reporting then? Even in Schedule 3, when the 11 ratios are to be reported, it is not talking about GP ratio, NP ratio only. It is not that way. Worldwide, if India has to grow, it has to go worldwide, comparative worldwide. We cannot remain at our level then say, okay, we will be one of the developed countries and the largest economy of the world. We have to bring our businessmen, entrepreneurs to a level that they can scale at any time. So basic level, they have to come. Ek level pe to aana padega so that they can jump anytime. If they remain at that level, then how they will grow?
And how to, one question from
country.
Got it, Pramod bhai. One question from Dhaval, that in case of PPE or depreciation, since for non-corporate entities, as per Income Tax Act, they are required to maintain the books of account for 7 or 8 years. And they maintain the books of account as per block of asset principle since long. So now you require the gross block and the depreciation up to that period. How to cope up with that problem?
Satish bhai, I discussed that during my presentation. So AS10 is there since 1991. So for financial statements, it was required, gross block, depreciation block, net block. But actually what happens that over the time, income tax and GST, we have inbuilt that into the financial statements. But the financial statements are not true and fair. Now, practically, if a proprietorship, partnership, LLP, whatever it may be, or even a company, I would say, they are still providing on the block of asset method, not disclosing reduce the total amount from that block, which is allowed under income tax. Then the auditor will have to qualify, report in his audit report that they are not complying with AS10 in relation to my disclosure and the sale of the assets. Recognition, of course, they have to, because otherwise, so what will happen, whether that will meet the definition of PPE. Otherwise, what will happen, I have made certain normal expenditure and I capitalize it. No, you have to comply that when it will be a PPE, if it is to be used for more than a year, then PPE. So those conditions have to be met. But disclosures and depreciation are not done. So one thing, if they still don't want to change, so they can report appropriately in the audit report and continue doing that. Or secondly, they decide that, okay, from now onwards, I'll do. Then what they can do, say they take the benchmark of 31st March 24. They say, okay, that was the closing WD of the relevant assets. So they create a different block of that and take that as an opening WDV and depreciate that over the year. And for the new assets, they start doing that. So over the years, everything would be fine and aligned. Fine and aligned.
And one more question in the borrowing cost, the interest is interest paid to partners. What our accounting standard AS 16 says that it is the cost of borrowing, but actually it is not the cost of borrowing as far as partner is concerned. So whether it is legal or it can create a problem for the non-corporate entities.
No, it will not create any problem, because that is, of course, a cost of borrowing if I talk about. And here, if I talk about, that is his money contributed, and my income tax, if I talk about income tax, that interest which is there, it is tax in the hands of partners, the income from business, not income from other sources interest. Right? Income tax, it is doing so. So here you have to again report appropriately as per these formats. So income tax, there will never be an issue because they will be complying. But the financial statement formats, as we have already done, they should disclose like that.
Okay. So any other question, Ronak, you have?
Yes, Satish, sir, may I ask?
Yeah.
There is a question. In the new format, there is a line item of provision for income tax. How the provision for income tax was prepared for a proprietary business, whether they have also other income or capital gain or any other income from other source.
Yes, AS 22 is mandatory for even proprietorships. So what they should do? They must be knowing the history of that proprietor, because that provision is required even for companies. Now, if I talk about a proprietorship, they should have a computation of that, a proposed computation of that, which gives income from all heads. Then when the tax is calculated, they will have an average rate of tax, and on the business income, they should provide to that extent. On the business income, to that extent, they should provide.
Only the amount of tax paid on business income is need to be provided for provision.
Yes.
Okay, sir.
Complete.
Sir, all done.
Very nice, very nice. So now over to Ronak for the thanks to Pramod Bhai. I am really thankful, Pramod Bhai, for giving his valuable time for our members. And I think most of the members make a clear view that now there is no other alternate except to go for these new formats. And they should go, although it's really tough for making a balance in between time management and the Mofussil areas are facing the issues of the low feesage with that particular hard work they are being to done for at least for 1 or 2 years. And they are also lacking of the assessees of the Mofussil areas are also lacking about the knowledge of all these formats. So the entire burden comes on the chartered accountants. So there are certain things and qualification. If we make the qualification in the cases where there is no compliance by the assessees of these formats of the accounting standards, then assessees may face the some problems while
Satish Bhai, just 2 points out there. One, not able to charge a fee cannot be the basis to provide a financial service. He may not charge it, that is his cost, that is his call. The assessee may be ready to pay, that the professional has to take care. But just charging a lower fee will not relieve from his responsibility of true and fair view.
Yeah, I got it, and I'm just saying
it was there earlier also.
That it's really secondly, tough to make the balance in between these things, but he has to make.
Satish Bhai, understand that these businessmen in Mofussil area, do not handhold them. The moment they grow, their next generation come, they will be totally taken aback. Or these chartered accountants who are there, the moment the client grows and they are not up to date, they will change the CA. They will say you are not capable because you are not up to date. So it is a win-win situation for the business, for the country, for the professionals.
Great. So thank you, brother. Thanks a lot for your wonderful deliberation. And I think all the members must have benefited out of your deliberation. So thank you very much, sir. And we would again request you, because this is the topic where we need more sessions, more such sessions. And although our CP committee's webinar does not permit that we can talk in Hindi, they want that it should be in English only. But I just want a session should be taken in the Hindi language also, so that particular area of north, or I can say east or
North, east,
west,
west, central.
they can be benefited by your that particular deliberation. So thank you very much, sir. Thanks a lot for giving
Thank
such
you
a
very much,
time and
Satish bhai.
wonderful. Thanks
Thank
a
you,
lot.
Sandesh bhai.
Thank you. Over to Ronak.
So I, on the behalf of CP committee, thanks Pramod sir for such a wonderful and knowledgeable session, and for patiently answering all the questions which was asked by various members from the country. Thank you, Pramod sir. Now, I would like to introduce. I would like to invite C.S. Satish Kumar Gupta sir for our next session, which will be on importance of CP, importance of CP hours. Over to Satish sir.
Thank you, Ronak. Thanks a lot for giving me this opportunity. Thanks a lot to CP committee and my brother Ajit Bhai and Vishnu Bhai and all the team of the CP Tech team and my dear friends who are attending this webinar in such a large number. I hope you must have loved that particular session of Pramod Bhai, and I'm happy to announce that more than 1,500 members were registered in this particular webinar. This is something very great, and we just request you that kindly make it habit to attend the Friday webinars and other webinars organized by CP or other our central committees. It will help you in getting the credit of unstructured learning hours also. So next session, I'm going to take on that CP committee, importance of CP, and what are the rules and what are the challenges and what are the new things which we are going to implement from this year onwards. So I would like to narrate all these things, but I would request Tiwari ji that kindly we can
Yes, sir.
just have our PPT. Is there an issue? Okay. कोई issue आ रहा है क्या तिवारी जी? हो गया, yes. So friends, this is the PPT on the importance of CP learning and its compliance for members. Friends, I personally believe that CP is the growth line of our profession. And if we miss the CP, we miss a lot. Because if we are not following the continuous professional education, we are missing the new changes in the law, new changes in the ethics, new changes in the practice, what is happening to the world, what are the new skills, what are the new provisions. For example, if we would have not in continuous touch with the CP, this artificial intelligence would have come and we would have not known about all these developments in the entire professional world. So friends, I personally believe that it is must to have CP. Next, Tiwari ji. I would just share a CP impact with you, and you would be happy to know that we made CP credit compulsory 20 years back. Since then, friends, over 1 lakh CP events have been organized where more than 1 crore members have participated. And if we convert all those participation, so you would be happy to know that more than 3 crore hours and more than 5,100 years of learning time has been seen by the CP committee in last 20 years. So it's something very great, but I personally feel that we need more. We need more. And that's why since 2023, next slide, since 2023, we have made CP hours compulsory. Compulsory means if a member do not follow the CP credit, he may go to face some challenges, and the last challenge may be disciplinary committee. So what I want to say, friends, कि now from 2023 onwards, CP credit is must. Now I would narrate you what are the CP requirement, and you would be surprised to know that it is very minimum. You see, we have divided into 5 parts. Now, the most important thing is the members below the age of 60 years and having COP, certificate of practice. Then he has to complete 40 CP hour credit in a calendar year. 40 CP hour credit in a calendar year by a member who holds certificate of practice and is in age less than 60 years. And out of those 40 CP hours, he has to do 20 structured learning and 20 either structured or unstructured learning as per the choice of member. So what is the meaning of this particular provision? That suppose a member is of 35 years age, having a certificate of practice, he has to undergo 20 structured hours and 20 structured or unstructured hours at the choice of him. And out of 20 structured hours also, he may take 4 hours credit by visiting the digital learning hub. So what I mean to say, friends, that a member below the age of 60 years having a COP has to do only 16 hours CP credit in the entire 1 calendar year. In the entire 12 months, starting from 1st January to 31st December of any year. So these particular 16 hours physical training, physical credit is not a must credit, and it is a requirement of the profession. If you are holding the COP, it must be there. Otherwise, we are not, I can say, we are not so comfortable in testing our reports or in testing the certificates. So these are let it be there only, that slide. Now for the members below the 60 years having no COP, only 20 CP hours they require, and that may be either structured or unstructured. It is also the choice of member. Members below 60 years residing abroad, again 20 CP hours credit, whether they hold the COP or no, only 20 CP hours credit, whether structured or unstructured. That is again as per member's choice. Members above the 60 years of age having the COP, they have to go for 30 CP hours. Again, as per his choice or her choice, they may have structured or unstructured. And members above 60 years, they are exempted from CP hours requirement if they don't have the COP. So with these minimum requirement of COP, friends, I think you must now agree to me that 16 hours CP physical requirement for the members below 60 years having the COP is not a critical one. And I think you must suggest the CP committee or the ICI that this condition should be enhanced. There should be more credit requirement for a member having the certificate of practice. I still believe, friends, that as of now, there is no law of structured credit for the senior members. But I personally feel that there should be at least a requirement of minimum hours of physical credit even for the senior citizens, because they are practicing, they are signing the attestation functions, they are having the COP, and since they are having the COP, they are doing the attestation function. It is a need of the hour to have the CP credit in physical mode. But it is my suggestion, it is my wish. As of now, the law is in their favor that they do not have any need of that physical CP credit. So there are two types of credit: structured, unstructured, which I have already spoken. And if you want to know more about that particular thing, so you can visit our CP portal, www.cpici.org. Next slide. One more important thing, how the CP credit is being updated in the members account. Structured CP hours in members account are updated by the CP committee. It is almost automatic, and this is the system based and almost automatic. But being the program organizing unit upload this particular CP credit, it may take some time sometimes, but we are going to make it that it is not being delayed, and the member get the credit immediately after attending the CP program. And if the unexpected CP hours are there, then friends, this is very important to share with you that up to 2023, there was law that the unrestricted CP hours done by the member on a self-declaration basis could have been updated by the 31st May of the next year after the calendar year. But now from preceding year, there is a change that now the unrestricted CP credit can be updated by a member only by 31st December of the same year. What was the purpose of this? That if you do the unrestricted credit today, suppose today you attend this webinar today. Yes, I would like to tell you that the credit of webinars organized by central committee, suppose this particular webinar, for example, the credit will be updated by the committee only. So you need not to update the credit of unrestricted learning organized by the central committee of ICI. But for other programs, suppose you go in a program of local tax association and attend a program for 4 hours, 3 hours there, and you write some topic, or you just make a research on any topic. So you can update that program on the same day. You should not wait for the end of the year and that thereafter up to 31st May. So the purpose was that the updation of the unrestricted CP hours should also be done immediately. So now from this year onwards, the 2025 unstructured credit shall be uploaded by the member only by 31st December 2025. I would repeat, friends, if any member go for unstructured credit, he attend any webinar, or he do any research work, then that member should upload that particular unstructured credit immediately, or latest by 31st December 2025 for this year. Next year by 31st December 2026. So now that particular relaxation to upload by 31st May of next year is not available as of now. For this year only, for the year 2024, the committee, understanding the difficulties to be faced by the members, allowed the members to upload their unrestricted credit up to 31st May, and most of the members took that benefit, and I think most of the members must have completed their updation. Next. So what is the structured CP learning, friends? Structured CP program means attending the conferences, attending the seminars, workshops, certificate courses organized by program organized units, suppose branches, regions, chapters, like this. You can participate in study groups, technical committees of government departments, working groups as per guidelines, or regulatory bodies, authorities, professional bodies on application to the CP by the member committee of the ICI. So these are the programs. If you attend, then it will be called structured CP learning. Next. One more thing. If you write an article on any topic, and that is published in professional journal, national newspaper, regional language paper, then also you can get the structured CP credit for that particular your write-up you have written. And e-learning participation in e-learning courses conducted and monitored by ICI and its central committee is also structured CP. Participation in e-learning videos available on ICI Digital Learning Hub, which I told you up to 4 hours, is also CP learning. Next. What is the next? Now, facility to obtain the CP hours under structured learning activity through attending webcast of central committees of the in the premises of the respective CPPU. This particular provision is applicable for the CP, continuous professional education program organized units, and that it means that if any study circle, study chapter, or study group have the facility to show the live webcast, I would repeat, live webcast, real-time basis, of the programs organized by central committee in their premises, for which the attendees are eligible to get the CP hours under structured learning activities announced by the central committee for each CP webcast. For example, today, I just give the example of this webinar. This webinar is being hosted by the CP committee. And if any CP chapter or CP circle or CP group make the arrangement of this program by live webcast on real-time basis at their premises, then the members attending this particular webinar may get the CP physical structured learning CP physical activity like physical activity, provided the CP committee has allowed that this is a program where CP hours credit will be available. And in that case, convener of that particular circle, chapter, or group is required to upload the attendance of webcast program on the CP portal. Next, friends. Yes, next. Meaning of unstructured CP learning. Unstructured learning, I have already stated, but just to give more lights to you, self-learning modules and courses you can go through. Group or bilateral discussion on technical issues. Suppose you make a group of 4 or 5 chartered accountants and have a discussion on any topic of technical importance. Thereafter, you can claim that unstructured learning. If you are a visiting faculty or a guest faculty in university or management institutions, you can also claim the unstructured learning. Internal training program being organized by firms of chartered accountants having 7 or more partners. If a chartered accountant firm have 7 or more partners and arrange an internal training program, there also a claim of unstructured learning may be made. Participation issues and CP state. Yes, participation CP next. Yes, पिछले वाला back. हाँ, participation CP webcast program without the supervision of the POU, that is also unstructured. Just suppose, for example, today's program, if it was not being directly live telecasted by the POU, then the members attending this program by way of registration may claim the unstructured learning. And providing solution to question puzzles available on web, other professional journals. If any solution to any question, puzzle in any professional journal or other website वगैरह is given, that time was taken by the member, may also be claimed as a unstructured learning. Viewing of program hosted on the web channel of ICI. ICI has its own web channel. If any member view the program hosted on that particular web channel, that is also an unstructured learning. So these are the things which I wanted to tell you that about. Next. Issuance of CP Statement 2023. Friends, this particular topic I wanted to talk with you, and the purpose to host this particular webinar and to have this topic was this particular CP statement 2023, because friends, before this statement, there was no action on the members if they do not complete their CP credit. But after CP statement 2023, which was issued on 30th January 2024, there are consequential provisions for non-compliance of the CP hours. And the first leg of this non-compliance consequential provision has been started and is going to end on 30th June 2025. That's why I am here with this topic. And I just want to tell you, friends, that if any member is short of CP credit for the calendar year 2024, so kindly do 3-4 works. Kindly just segregate that lapse is on account of structured learning. Then mention the hours, how many hours you have not completed of the structured learning. Second, if there is any lapse on account of unstructured learning, then also mention the hours which you have not completed in the year 2024, calendar year 2024, which was extended up to 28th of February 2025. If you have not completed by that period, then also mention those hours also. So you have done your first work, that how many hours you have not completed under structured learning and how many hours you have not completed under unstructured learning. Suppose a member has not completed 5 hours of structured learning in the calendar year 2024, extended by February 2025, and has not completed 5 hours of the unstructured learning. In that case, the first leg of that consequential provision of non-compliance, which has been started on 1st January 2024, or I can say 1st March of 2025, and going to end on 30th June 2025. You will have to complete your incomplete portion by making it double. So you, in our example, 5 hours each for structured or unstructured have not been completed by a member, then he has to complete 10 hours for structured and 10 hours for unstructured by 30th June 2025. This is very important, friends. And this is in addition to your requirement of 2025. It is just a compliance of calendar year 2024. So, meaning thereby, any lapse, any which have not been completed by a member, just to save himself or herself from the consequential provisions of non-compliance, they must complete double of the short duration by 30th June 2025. So this is my submission, and that's why I am here today, friends. If we don't do this by 30th June 2025, what is going to happen? The second leg, Tiwari ji.
1 minute, sir, just time.
Yeah, no issue. That leg 2025 टेक्निकल इशू
सर हाँ, एक सेकंड सर. सर ये थोड़ी आवाज भी सर आपकी कम आ रही है मुझे. इट्स नॉट प्रॉपर्ली ऑडिबल.
मेंबर्स आर नॉट लिसनिंग.
सर थोड़ी सा ना नेटवर्क इशू था शायद.
हाँ, नेटवर्क इशू हो सकता है. नेटवर्क इशू एट आज सीपी कमेटी में नेटवर्क इशू लग रहा है मुझे. आप ये देखिए, यहाँ पे जो भी है ना, आपके सिग्नल्स बहुत कमजोर आ रहे हैं.
ओके,
मेरे पास जो आ रहा है.
जी. देखो जो मुझे भेजा जाओ, यू जस्ट गो एंड चेक.
नेक्स्ट, ये तो हो गया. इसके आगे चले.
हाँ सर.
I would request all the members, if
Sir,
they
yeah.
have not completed their 2024 CP credit, please do that by 30th June by doubling the shortfall by 30th June 2025, so they can be saved from the other consequences. So level 2, friends, level 2 says that the names of the members who don't comply by 30th June 2025 shall be classified under non-compliance status from 1st July 2025, and their status will be reflected on the CP portal under the members login until the compliance is achieved. So what is the second leg, friends? Second leg, we would see that if you have not completed your 2024 year shortfall by 30th June 2025, the CP committee shall mention your status that you have not complied CP credit on the portal in your account. So the second leg will go to that extent. So I would request that we don't want that any name of any member comes to that particular portal as a non-compliant status. Thereafter, friends, what will the third leg, level or third leg, is of the consequence. What are the consequences if we, even after mentioning the name as non-compliant on the CP portal?
Now it's on screen, sir.
Okay. So from 1st January 2026, a member holding certificate of practice is required to disclose the status of non-compliance of CP or required in the MEF. Now you understand the importance of doing the CP credit on the timely basis. You have to mention in the MEF of ICI that I have not complied the 2024 year CP credit requirements. And that particular list of non-compliant members shall also be provided to the PDC of the ICI by the committee. They will match that whether you have mentioned that particular fact of non-compliance, or even if you do not mention, they will take the action, and it may lose to our members in not getting their MEF complete or the panel complete. Next. Now I would level 4. It would start from 1st July 2026. So we would wait that you complete your CP credit of every year in time. But even if you don't do it by up to 30th June 2026, then no peer review certificate on final basis shall be issued to the firm or the individual. Only provisional peer review certificate shall be issued. And if even any partner of firm has not complied with that CP requirement, then even that final peer review certificate will not be issued to the firm, and only provisional peer review certificate shall be issued. So this is a level 4 consequence. And after this, we would also provide another 6 months to the member up to 31st December. Even if member do not do this particular completion, that by completing twice of the shortfall of the year 2024, then the information may be given to the disciplinary directorate for the necessary action in accordance with the provisions of Chartered Accountants in 1949. So what I want to say, friend, before 2023, there was no such provision. But in 2023, there was a statement was brought by the institute, and these consequential decisions were taken. If any member is not complying with the CP requirement, so these there will be some consequences, and they have divided it into 5 parts, and they have given us time to complete that shortfall of the credit by making it double attendance. So, but it is not only applicable for only 2024. It will continue 2025, every year 2026, 2027, and that time of every that December 26 will be December 27 in case of 2025. In case of 2026, it will be December 2028. So we are providing, institute is providing a sufficient time to our members to complete the CP requirement. And believe me, friend, just 16 hours physical and 4 hours on the digital learning hubs or 20 hours on the unstructured learning, it is not a much requirement fixed by the ICI, and each one of us doing the COP must adhere to this particular provision just to avoid all these consequences. Next. Way forward. Friends, yes, there are certain issues with our remote area chartered accountants that they are saying that they don't have such facilities of CP programs in their nearby towns. So what we are going to do at the committee level, friends. We have taken that this year we would focus on the formation of new study chapters, new study groups, and new study circles, making the CP programs available to all, to the last member or to the member of Mofussil of the remote area. And that's why we have just made a program, Sarv Sulabh CP program this year also. And with the help of this program, we are reaching to all such members, all such Mofussil or remote towns, or the villages or the small towns, just to make sure that CP activities are available to all. As of now, CP committee have 692 POUs, and we have 50 POUs in the foreign countries also. Next. One more thing, friends, Sarv Sulabh CP program, I already told. One more thing I want to share with you, that focus on quality and availability of the CP program across the globe. What we have decided this time, and just to make, we need your suggestions, we need your feedbacks for that particular thing, that we want to make that CP credit available to member on real-time basis from this year onwards. With the help of technology, friends, we are coming up with a new CP portal, and we are coming inbuilt technology therein, that the member who attends the program for the time he attends the program will get the credit only for the time which he has really attended the program. For example, suppose you register for a program of 6 hours, but you attend the program for 2 hours only. The member will get the credit of 2 hours only. If the member attends all the 6 hours, the member will get the credit of 6 hours only. So with the help of technology, we are going to implement this particular provision this year, because, friend, 20 years have gone when we made the CP compulsory. And even after 20 years, if we are not focusing only for 16 hours physical attendance of CP program, then something decision like this was the need of the hour. And that's why, but still we need your suggestion that how can we make it better? How can we make it I can say, member friendly? Next. We are also organizing Train the Trainer program, faculty development program, and just to make it possible that each and every member get the CP program attended. And we are also going to issue a calendar of events for our branches and the CP chapters and the circles, that mentioning there in the lots of topics, lots of subjects. So the branches or the CP chapters or circles may organize as much as the program for the benefit of our members, and enabling the members to attend the CP programs. Next. Yes, friends, this is something, a very good figure which I want to share with you. This is from 1st June 2024 to 31st May 2025, 12 months program. You see, friends, in these 12 months, your CP committee organized 8,202 events throughout the country, whether it is physical or whether it is virtual. But, friend, this year, this figure is going to cross, because we are requesting the branches and the regions and the CP chapters and CP circles to organize more programs for our members. And out in these 8,202 events, CP events, 7,72,473 members. It's not a small figure, friends. Attended these programs, and the total CP hour generation out of these programs was 41,49,818 hours. So this is not sufficient, friends, because as of now, what I personally feel that around because some members do attend the more programs, some members do attend the less program. It also includes the virtual programs also where the structured learning credit is not available. But if we see the 40 hours requirement of a member, practicing members, and 30 hours by other members or 20 hours by other members, structured or unstructured, then we are more than 4,50,000 members. So we require around 1 crore 20 lakh hours programs. So it is not sufficiently been attended by the members. So the purpose of bringing this figure was only this: we should be more focused on the CP program and we should attend. Rather, we should say our branches, our regions, our chapters, circles, that what do you like in the CP program? You write to us. If you write to CP committee, you want this program in this area. And I assure you that CP committee ensure that program is happened in your area. If you want to work, you see the webinars, our Friday webinars, what 3-4 changes we have made in our Friday webinars. One thing you would, I think whoever attended this program must have noted down that we have started to bring the speakers from the foreign countries who are talking about the opportunities for chartered accountants in their specific country. We have also started to invite the speakers of the industry specific and who are talking about their industry, opportunities for our chartered accountants in their industry. We have also started to invite other topic experts. We are also inviting the council members and the past presidents to motivate you that what is the need of the CP hours and what are the topics which you should go through. We are also going to start one more segment in this webinar that what we personally feel, friends, each and every government scheme, whether it is central government scheme or whether it is state government scheme, has a potential for our chartered accountant members. And we are working on that. We are just training the speakers that they come forward with one scheme and deliver that provisions of that scheme, specifying and stressing upon the opportunities for chartered accountants. And believe me, friend, that particular segment will bring a new vision, new area of practice for all of us. So we are at CP committee are working a lot, working a great, but it is not complete unless you give your suggestions frequently, you give your feedback frequently, and you criticize us in a positive manner frequently. With all these things, if you criticize us positively, if you give your feedback, if you give your suggestions, that will enable us to improve further in CP committee. Next. Friends, these are the data of members for calendar year 2024, which were extended up to 20th of February 2024. It is just an eye-opening data, friends. What I want to say, the total number, we have divided total number of that for that particular 2024 calendar year in 4 categories. COP holder less than 60, non-COP holder less than 60, COP holder 60 years and above, non-COP holder 60 years and above. And these are the numbers, friends. You see, less than 60 years, total members are 1,32,500,859 who complied with this provision, and 59,000 complied, and who not complied are the 73,470. So compliance percentage was the 44.70. It is not encouraging, friends. And thereafter, see the non-COP holder is 60 years and above. You see 28,033 members were there. Out of 17,009 were complied, 11,000 did not comply. This is ratio of compliance is 60%. Even 40% have not complied here. And if you see the non-COP holder, then the compliance ratio is the very 26.82% only. Around 74% are non-compliant. So the council made these rules of consequences of non-compliance in 2023, just seeing all these figures. So what I again request friends, make the CP programs a habit to attend, make that this is something which you need. Don't attend just because you will be penalized when there is a compliance, there is a consequence. Yes, there is a consequence and you should attend. But don't attend just because of that provision. Attend because it is the need of the profession. It is need of yourself. It is need of the improvisation. It is the need of the better services to our clients or to the nation. So friends, I think this is the next slide. This is the last slide. This was the last slide. And I want to thank with the core of my heart for all of you who attended this webinar till last and gave me an opportunity to explain you the provisions of CP credit, the consequence thereof, and the importance of the CP programs. And I earnestly request the folded hands to you, each one of you again, that make it habit to attend the CP program. Because it is the need of the hour, it's the need of the profession, it is the growth engine of the profession. So friend, thank you very much. Thanks a lot. Jai Bharat, Jai Aishai, and over to Ronak for the last.
Thank you, sir, for such a knowledgeable session. So there are some questions from our members.
Yeah.
Whether the part-time COP holder will counted as a full-time COP holder, or there is any distinction between part-time COP holder or full-time COP holder?
No distinction. But what is the position? The part-time?
They are sir equally treated as full-time, sir. Wherever the COP holder means part-time, full-time, covering the both.
So one of our sisters has asked, what is the procedure for claiming the exemption due to pregnancy for CPR completion?
Yeah, Tiwari, please speak.
Yeah, see, there are various class of people who are exempted, such chartered accountant. One, of course, that non-COP holder more than 60 years, they are automatically exempted, system driven, based on their age. Otherwise, the members who are entrepreneurs or UPSC civil services or PCS state PCS, some tribunal judges. Also, that lady who are pregnant in the year of pregnancy or the year of birth, any of the year, they can get benefit of this thing simply by sending an email at cpadmin@isi.in. On portal, we are given the provision exemption. So simply they can send the proof and they would get exemption. Yeah, Ronak.
Ronak, another question?
Yes, so there's one more question. How to inform CP committee about completion of previous year CP hours? When someone has completed the unfilled hours of 24, completed in 25, and how CP committee will know that these hours are or belong to 24?
Tiwari ji.
So already for the previous year, we have extended till initially 28th of February 2025. And recently, the committee under the leadership of Chairman Sir and based on the members' request, again we had extended till 31st of May 2025. Now because 1 day back only that was closed for the submission, and like sir told earlier also, after this consequential provision application of this thing, member need to file within the last date of that year. Means for 2025 they should file by December last date.
They should file immediately after doing the program.
Yes.
So it should be habit.
If you
have done anything in an unrestricted way, you must upload that particular thing immediately.
But the question is about how CP commits. Suppose a member has only completed 15 hours in 2024 till December 24. and he has completed.
So they need to do double. Sir, in that case, he need to do double. One more information till 30th of June
Nahi.
2025.
CP portal available. CP portal mention, there is mention of the CP, how many hours he or she has completed. And we also send them mail and SMS also. And we are going to start the WhatsApp also. We are in the process that how we can send the WhatsApp to members. What is the real position of their completion of the CP credit? And they can write to CP committee also if they are not getting anything and they have any objection or confusion or some issue that their credit has not been uploaded. So they can ask to the CP committee. They will take care of all these things.
One more information, even if some members, suppose, because structured learning, nothing can be done for the last year. But unstructured learning, even if they want, they can do it by, making the double of, shortfall. In any case, suppose somebody has, forgot to file, or we can say, so by doing, double in this year, 2025, they can comply with the provision of last year as well. This is
Good. Any Ronak, any question?
No, sir. Thank you.
Okay, thanks to all who attended this webinar in a very large number, I think, something very great. Thank you very much.
Thank you very much, sir.
And thank you, Ronak, for nicely moderating the session. Thank you, Vishnu Bhai. Thank you, Pramod Bhai. And thank you, Tiwari ji and team. And thanks to the technical team also. And thank you, each one of the member who attended this. Thank you very much. Thanks a
Thank
lot.
you, sir.
Okay, bye.
Thank you so much.